Well, well, well. It looks like the market is rather optimistic after the election. We did just have the holiday season, and retail sales might have missed analyst expectations, but are still showing growth. Earnings season is kicking off strong, but how does any of that information help us self-directed investors get our personal finances in order for 2025? You might be asking, as well you should be.
Well, we have a plan to help us plan. And exactly why we're starting a new series, a quarterly financial check-in, pulse check. We really need to come up with a name, Jesse. Yeah. So maybe our listeners can help us with that. But each quarter, we're going to do this quarterly. We're going to give you an actionable plan to stay on top of your money. There might be homework today or just like a fun little thing.
An activity.
Yeah, exactly. Budgeting, investing, savings goals, and a quick market update to keep you informed.
And to make it fun, we've gamified the whole process. So let's get into it, shall we?
Yes, we can gamify education, not trading. You know, FINRA's listening. Ding, ding, ding. Education.
Informational purposes only. You're listening to MakeHer, the self-directed investing education podcast that demystifies the world of investing and breaks down complex financial concepts from her perspective. That's us. We're her. We're not finance bros. We're your finance sisters. Well, Jess is your fin mom.
Oh, and you're the fin auntie, which makes us finance sis. Get better with your finances. That's right. I'm not your finance friend. I'm your mother. We're your host. I'm Jessica Inskip. I act as the teacher. I've been working in the self-directed investing space for 15 years and counting. I worked at Scottrade, Fidelity, and Merrill. I was licensed for 10 of those years, and I gave up my financial licenses because of the misinformation and lack of information on social media. Can't have them and post on social, folks. So currently, you can find me on CNBC, Fox Business, Yahoo Finance, and the Schwab Network talking about how the market works, what's going on with it, all the things.
And I'm Jessie Desnuit, beginner investor extraordinaire, asking Jess all of the questions so we can all learn how this esoteric world of investing in the stock market works and make our money make money. It's like magic, you know, you just have to know all the basic concepts, ingredients, and how compound interest works, and poof, hopefully.
I like it. Yeah. And together, we're on a mission to make you fin-fluent, not fin-fluenced.
That's right. And we do that in 3 ways. We educate and explain, keep it current, and tell you how to actually apply it. So today we're going to kick off our quarterly financial planning activity, which will cover all 3 categories. Oh, and we do have a free worksheet for you in the show notes if you would like to play along or do it later when you're not busy driving or working out or whatever it is that you're doing right now. It's a bingo style sheet if you need the visual, kind of like a bingo vision board for finances. Jess, didn't you just do this on one of your TikToks, like at brunch with your friends?
Yeah, that's what actually inspired this.
Cool.
Everyone was doing those bingo cards. We decided to do it quarterly. I covered a lot of my personal finance stuff, and so did everybody else. But so really we're bringing that, but a market maker version to the podcast today.
Like it.
Yeah. So here is what we're going to cover today. 1, let's talk about quarterly planning. We're going to do this quarterly, why it makes sense. And newsflash, it has to do with the market. 2, this is not a budgeting podcast. Those are plenty of those. They do well. But we need to talk about it to plan properly. It's part of the process. So we will talk about budgeting a little bit today. 3, once we budget, we can shift to investing. We have to know our excess, right? And finally, we'll do a stock market update and talk about what we are watching in the markets this quarter. After all, it is earnings season, aka report card season.
Oop, that's right. Okay, first things first. Why are we talking about quarterly planning instead of yearly goals? What makes quarterly planning so effective?
So we look at the stock market quarterly. The stock market operates on a quarterly basis because companies report earnings every 3 months. We analyze trends quarter by quarter. We should do that too.
Well, that makes sense. I guess if you think about it, even at our jobs, we might set quarterly goals or have those quarterly business reviews with our bosses, you know, like a QBR or something. So quarterly is always good. Check-in points, right?
Yeah, exactly. It's better to measure progress too. You know, you can adjust. And I think longer term goals are more difficult to attain. So smaller goals are easier to achieve. And I honestly will never follow through with yearly goals. They get lost. I need bite size. So Quarterly goals are much better. We line it up with how we analyze the market. Companies do that way. That trickles down to the employees' reviews. Makes sense, right?
Yeah. And especially for those of us with ADHD, which Jess and I both have, we need deadlines and incentives to keep us on track. So, okay, we're syncing with how the market works and we're making sure we can see progress faster. I think our brains will definitely like that.
Yeah, and we did decide to gamify the process with bingo cards, but instead of BINGO, we are using the acronym SMILE, S-M-I-L-E, because that's what you'll be doing when you achieve these goals.
Well, that's cute. So it's like corporate America's SMART goals, S-M-A-R-T, except we're doing it better because we're helping our own personal money grow and, not the man.
Oh, exactly. I mean, and you still probably should use the SMART methodology when we're doing these. We want quantifiable.
True.
But let's break down what the acronym means. So on your bingo card, you're going to have 5 rows and 5 columns. You'll see that on our free download. The point is, and we'll mark this on the card, is you're going to have 5 in each category. So your goal is if you do get bingo across the way we've done it, you'll get something in each category. It makes it well-rounded. That way, we're not doing too much, right? Okay. So 1, S, skill up. That means focus on learning a new skill or refining an existing one. So when we're talking today, and it could be Excel shortcuts, latte art, whatever. But if we say a term that you don't understand from a finance perspective, that could be a skill up. Maybe you want to know more about the credit market, or maybe you want to learn more about how the dollar works, or maybe there's something there where you want to learn more about that we can help you with. But that's what the skill up part is for, is what is something you want to refine. 2, a lot more of what we're going to, well, not necessarily, but M, monetize it. So creating or enhancing a revenue stream. This might be your side hustles. It might be for your work. Maybe you want to negotiate a raise, whatever that is. This is a like, think budgeting even there. Anything can go on the monetize it, but that is your something to do with your money.
Okay.
I, invest wisely. So this is where we're going to focus on the investing side. So make smart financial or personal investments, but personal investments could also be me time. Maybe you don't take time for yourself. Maybe you need to invest in journaling. Like, that is still, it's investing wisely, because time is an asset as well. So make sure you count that, face mask and wine, that's okay.
Yeah.
L, level up relationships. So building a deeper connection professionally and personally, network, check in with old friends, say hi to a neighbor. I put on there, I have to time block and make time for my friends because, we have this podcast and I have a full-time job and I do the media stuff and I'm a mom. Yeah. And so on personal relationships, I had make a Lego with my son. So that's level up relationships, can be a relationship with yourself or whatever you want it to be.
And there's so many studies on how that really affects your happiness, like spending quality time with friends and family and loved ones. So it's a good one.
Absolutely. And maybe you can make a podcast group. We're going to bring it back. Yeah. And then E, embrace the chaos. This is just taking a risk, take challenges head on. Growth is messy, but that's where magic happens. Maybe you want to learn a new habit. Maybe you want to journal daily. That's chaotic for you. Cool.
Yeah, that's a good point. Embrace it.
Mm-hmm.
And, growth and healing, it's hard, but it's worth
it. Yeah. So just a quick sum up: S, skill up; M, monetize; I, invest; L, level up relationships; E, embrace the chaos.
Nice. I like it. I see how this is going to play out now. Okay. So if you want to play along, check out the free download in the show notes when you can, or maybe come back to this episode later if you can't do it right now. Obviously, we are going to focus on the I, which is investing, and maybe a little on the S for skill up, because this is an educational investing podcast after all.
Oh, what a wonderful contextual disclosure.
Yes.
I like that.
All right, Jess, my super intelligent and gorgeous friend and trusted teacher. How are we going to start doing this? Where do we begin?
Thank you.
And what happens if I get bingo? Do I get a prize or?
You get to smile, like self-fulfillment. We could consider that. Maybe we will. More to come. So get your free printout. We have the S.M.I.L.E. You want 5 things in each category. Be easy to see once you look on the printout. We'll tell you where to write it. And then once you get kind of like tic-tac-toe, 5 in a row, you win bingo. But it means you hit something in each category. So you're not trying to do all 25.
Oh, okay. That's what I wasn't sure about. Okay.
Yeah, all 25. And that's good because it's more attainable. That's the point. If we're sitting there and trying to do something for a whole year, or the point is taking that SMART concept, applying it to something a little more fun. It's visual so you can see it. So it almost looks like a vision board in a way as well, but it's quarterly. So we're going to do this 4 times a year and then we can reassess. So I like this. I've never done this before.
Yeah, me neither. Oh, I'm definitely going to do this. I'm excited about it because I have like lists that gather everywhere. I have like 10 written lists around and then my OneNote and all the different things, right? My iPhone notes. So like it would be nice just to have one, like a vision board, like you're saying, where you can actually kind of check things off. And it always feels good to check things off a list. So I like it.
It does. Yeah. And we're going to revisit this next quarter.
Great. Okay. So let's start with budgeting. I feel like budgeting is the thing everyone says you have to do, but nobody really tells you how to do it without feeling like you're financially grounded, like you can't even enjoy the simple pleasures of life again. Like, people always talk about coffee or avocado toast or whatever the thing is. But yeah, we should talk about that a little bit.
We should. And you're not wrong, Jessie, but we need to budget to see where we have the excess or where we need to cut back. Because once we understand our personal cash flow, we'll know how much we can invest. Like that's the goal. We can't make savings goals unless we know where that cash flow is coming from.
Okay. Sounds a little tedious, but we're going to get through it together because remember, we're all in this for the future goal of not having to work a typical job forever or whatever fantasy you have for future you. So let that motivate you. That's what's going to motivate me. Okay, so we'll start with writing down our income for each month because we are looking at our expenses quarterly. If you do not have a budget spreadsheet yet, you just made your first bingo square. Write that one down.
Yeah, exactly. So what we're doing is listing what you should look at quarterly. And then if you don't have this process, now you've made yourself a goal that you should. And I like it. So start by listing every single expense, your rent, your mortgage, your groceries, subscriptions, dining out, everything. Then write down all your income. It's going to give you a clear picture of what's coming in versus what's going out. And if something feels off, like you're spending more than you thought through takeout or something like that, or maybe you have too many subscriptions, you didn't realize it, it's going to take a little bit. It's not failure. The whole point is about making adjustments and understanding what's coming in and what's going out. And the only way to do that is by writing it down and seeing it. So this is going to be a tool to help you really figure out the goals that you need to do for the next quarter, which is the bingo squares.
I definitely need to do that. It's a great time of year to plan out your budgeting or start budgeting if you haven't done it yet.
Yeah. No time like today.
Right. Okay, but what about the budget that has no extra room for saving or investing right now?
That's when it's time to look for opportunities. You got to start small. Start small. Otherwise, you can't do it. Like sometimes I get overwhelmed by cleaning my house and it's just, okay, I'm just going to clean out my closet. Like that's actually literally a thing on my bingo card is cleaning out my closet. But start small because maybe it's canceling a subscription. You don't use that subscription. Maybe it's cooking at home 1 extra night a week. Small changes add up over time. Just like your money's compounding, like everything in life is, I feel like. And then once you give yourself a little breathing room, if you realize a lot's going out, then you can channel that money towards your goals. But you may need to cut back on expenses. That may be your goal. I personally need to have a no shop month. That is literally one of my squares. So I am having a no shop month.
I think it's important too, though, if you do cut something out with the goal to put it in investing, like your investing account, make sure that you actually put that in your investing account. Because if you're cutting that extra $20 out a month and you're just letting it sit in your checking account, you're probably going to spend it. So like have a plan to cut something out with the goal of putting it somewhere else. Put it in savings, put it wherever. So think about it that way too. But yeah, I think I see how this is how we make budgeting less of a chore and more of a habit, right? Like I know I need some kind of reward system personally to stay consistent. So maybe it's a system, and the system is blocking out time weekly, like Sunday evenings, to check in on my spending and make any changes I need to pair it with something that's like a treat for me. So maybe I sit down on Sunday and do my budgeting or whatever it is with a face mask, or use my little shoulder massager thing I have so that it makes it a little more enjoyable and allows me to multitask. This is all for the ADHD brain, but that's how I think it would work for me, because then it's not such a chore, right? You're like, oh, I get to do my face mask and my weekly budgeting now, or whatever it is. So yeah, I think we could put that to the test. I'm going to try that out, because that's how I need to do things. You got to pair things to make it a habit that's enjoyable, so you actually do it every week. And I think for me, on my S.M.I.L.E bingo card, building a healthy budgeting habit is what I'm going to write on there. And just, I'll put it to pair with a face mask or something I already have, because, we're budgeting. We don't want to spend extra money to budget. We want to try to find free things to pair with it as a treat that we have laying around. So
I like that.
Yeah.
I edit the podcast with the Arrows tour on the background. Fun fact. All right. But you need to start simple, though, because for some people, a no spend month or less eating out is easily attainable. But for others, it might be about setting boundaries, like how much you spend on fun versus essentials. Finance is so personal. So you're going to get personal and get to know yourself with these exercises. That's the point of a budget.
Yeah. And once you build your budget, it's like the first domino, and everything else just falls into place. So is budgeting where we find out how to fill out the rest of our bingo card?
Yes, exactly. So this is how we figure out our monetize it and invest wisely part.
Okay.
It's going to give you clarity on what's realistic and achievable within the next 3 months. Because if you sit there and say, oh, I want to put this much in my emergency fund, or I want to invest this much, well, where is that excess coming from? That's the goal of it. So the important thing is start where you are, no matter what the numbers look like. The goal is not perfection. I suffer with perfectionism. It's progress. Progress is just keep moving forward, fall forward. That's what we like.
Yes. Progress, not perfection. Okay.
Yeah.
Cool. So let's say I've tackled my budget and found a little extra cash, and I'm feeling good about that. What's next? Do we jump right into investing, or should we talk about savings first?
Yeah, well, we have a really good episode on the order of events of investing. So before you invest, you need to make sure your safety net is solid, which means you need an emergency fund, right? Mm-hmm. The general rule of thumb is 3 to 6 months of your expenses saved. It's like a cushion, but it keeps you from derailing your investments. Like emergency funds are for emergency. And I definitely say check out the order of events, because we say an emergency fund is very different. It may not literally mean cash. So we don't want to go into that detail. But the point is you can access liquid funds if you have an unexpected medical bill, or you need to pay for your car, something like that, because time in the market is so important. You don't want to take away from the investment piece if there is an emergency.
Got it. Emergency fund first. Start with smaller, bite-sized goals. If saving 3 months of expenses feels overwhelming, aim for 1 month, then 2. And if you do not have an emergency fund or an alternative, you now have a bingo square. But in order to know how much you can save, you need to look at your budget, which is why we did that first. Let's say I've got my emergency fund in place and now I'm ready to invest. What's the first step?
Yeah, so before you start picking stocks, this is not advice at all, but a great goal or rule of thumb is to get $10,000 in a passive fund. So S&P 500 index fund, or an ETF, or even the NASDAQ 100 index fund or ETF. These are low cost, diversified, and give you a broad exposure to the market. So that's always step number 1.
Wait, but why is it 10,000? Because you say that 10,000 number a lot, and that's oddly specific.
It is specific for a reason, and we never talked about why. I don't think so. With $10,000 in a passive fund, you're diversified in your position to take advantage of market growth. And it gives you a base before you start exploring individual stock picks or you get into more advanced strategies, because you want to be diversified before you start seeking alpha, which just means picking stocks to outperform the market. You don't want to be over-concentrated in something, because that could be bad.
Right. Diversification.
Mm-hmm.
Okay. If you do not have $10K in your passive account, you now have a bingo square. But it needs to be attainable. So what is your excess cash from your budget?
Yeah.
Think of that way.
Consider that. Like, don't try to get 10K in one quarter. That might be crazy.
Yeah.
Maybe you want to do this by the end of the year and you already have 5,000 already. Well, you can take that 5,000 divided by 12. That means you've got to save about 420 a month. And because you did your budget first, you will know if you have that in excess. And then break it down weekly. That's like $100 a week, not including market performance. Remember, you could hit that earlier because of the way the market moves.
Right. And if you haven't figured it out by now, the goal is to take bigger goals and break them down smaller, which is why we're doing this quarterly, because then things feel more attainable. So
absolutely,
that's the name of the game. All right, I'm saving and investing, but what if I have specific goals like maxing out my IRA contributions or saving for something else?
Yeah, more numbers. So to max out your IRA in 2025, we already have those. They didn't change. You'll need to save $7,000 if you're under 50 or $8,000 if you're over 50. So that should be about $583-ish and some change a month, which is about $291 bi-weekly. The key is to automate it. Set up automatic contributions so you're consistently investing without having to think about it. And also know, when I say automate it, you can automate it with your brokerage firm where you have automatic contributions into your IRA, but then you can also set up automatic investments. That is a two-step process.
Yeah, because just because the money transfers into your brokerage account, you still have to go buy things, right?
Exactly.
So you can have the money transfer into your brokerage account, but you can also have it transfer into, like, if you have a passive index fund, for example.
Yeah, not all brokerage firms do that. They do if they offer mutual funds, but not all of them do with ETFs. Most of them do, but not all of them do. So just make sure you set a reminder or have a brokerage firm that does that.
Or call up your brokerage firm and ask them how it all works. So you're making sure you're not just like letting your money sit there and not actually invest. That's very important.
Yes.
Okay, so what if I have a savings goal outside of my IRA, like 5,000 or 10,000 by the end of the year for something specific, like I need to buy a car or take a trip or something like that?
Yeah, same principles apply. Maybe you don't want to put it in an IRA, you just want to do it into a regular brokerage account for some type of goal. Break it down into smaller quarterly goals. If you're aiming for 10,000 a year, you'll need to save about $2,500 per quarter or about $834 a month. Automate it where you can. See, you just take the bigger number, break it down for when funds come in. Like, I personally, when I get my paycheck, I do direct deposit directly into my brokerage account. Or I've done it another way where it goes direct deposit into my bank account, automatic transfer into my brokerage account. So there's different ways to do that, but automating is key, especially if you get a raise. Definitely automate there.
Yeah. And check out our episode on CD laddering, because that's a really good way to like save up money for something. So
for sure,
we have lots of episodes and all that stuff. And this is where the S.M.I.L.E bingo card comes in handy as well, because you can figure out how investing and saving goals fill in your invest wisely square.
Exactly. And if we're using terms you don't know or episodes that you've never listened to, that can be a score too.
Ooh, I like that.
This keeps things from getting overwhelming, but also encouraging to keep learning. The goal is, again, progress, not perfection.
That's right. Okay, so budget first to find extra cash, save for emergencies, and then invest. Starting simple before diving into the deep end. Anything else we should consider here?
Just remember, it's all about balance. Make sure your saving and investing goals, they don't leave you stretched too thin. We want to live life, enjoy that latte.
Yeah.
That's why the budget comes first. It's your guide so you can understand, where is the excess coming from? What do I need to cut back on? Realistically, what can you put towards these goals? You start where you are and then you just build from there. And you'll be surprised at how much progress you can make by the end of the quarter. And making it in smaller goals is going to help you get there.
Yeah, I'm excited to try it. We're going to do it together. It's going to be great.
Yeah. And we're revisiting this in a quarter. So you will hear this episode again.
Oh, yeah. That's going to keep us all accountable. I like that, especially me, because Lord knows I need it. All right. So we've talked about budgeting, saving, and investing, but let's just zoom out for a second because you did say we were going to have updates. So what's happening in the stock market right now and how does it affect what we're doing?
Yeah, we went from one end of the spectrum. Now we're going to go to the other. So the market had post-election optimism. Remember, uncertainty was removed because the market hates uncertainty. That goes with volatility. Certainty was, we know, the election outcome. And the market rallied and actually gapped up post-election.
Wait, what is gapped up?
Oh, I have never, technical term there. It means the market opened up way higher than it closed the previous day. So it made like this empty space of price, which is a gap. Like
A gap.
Blank space. Technical things. Yeah.
Mind the gap. Okay. Got it. Then what?
So after that, the election outcome was understood. And then it actually triggered a surge in consumption, which almost makes sense. If you're not certain about an outcome, then you kind of wait before spending. But then we also had the holiday season. So when I say consumption, that means spending from businesses and personal consumers. There is growth in retail sales. Holiday sales, they were mixed with retailers, but it was still record breaking according to what comes out, the Adobe retail report. We'll link that in the show notes. So just the takeaway from that without going too deep is people are spending money post-election, period. Now we're heading into earnings season. And then the question is, when you have a big gap up, people are spending money. We want to see, is this optimism like translated fundamentally into earnings? Does it translate into earnings? And then we get a report card to understand that.
Okay. So what do we expect from earnings season? We have been talking about broadening. What are we looking for?
When we look at the market, we look at the S&P 500, 500 companies, right? They're expected to report year-over-year quarterly earnings growth. So our earnings growing of 9%. I like to separate it lately when we say broadening. We have a great episode on that from the Magnificent Seven, which is those big seven stocks. They have been carrying the market. They're expected to report 23% of earnings growth. So think about that. 9% for the S&P 500, but 23% from the Mag 7. That's a huge, huge, huge number in contribution, but it's a deacceleration. It was super high because of like AI, but now that's coming down, but it's still really high in comparison. If you take out the Magnificent Seven, so the other 493 stocks, those are expected to report 5%. So that's why you get the 9% because of market cap weighting. And if you did not understand any of that, episodes, write it on your card.
We will link the episodes that those are. Okay.
Yeah. And fun fact, banks always kick off earnings season and they are doing great.
Oh, I don't think I realized that. Cool. So sounds like we're off to a good start, but it's an early start. So what about risks and what about tariffs?
Oh, yeah. So the risk is supply chain risks. And I think we got to go back to COVID and just think about how companies react, because companies are lean and agile and have adjusted really since the great financial crisis. But COVID spurred diversification because that disrupted supply chains. If you're reliant on somewhere overseas, you realized very quickly that that overconcentration needed to be diversified. Great example, Apple was reliant purely on China. They have diversified to India because of tariffs and COVID, right? So a lot of companies, even with the thought of tariffs, because they've been through it before, and also they're still in place. Let's not forget that.
Yeah.
It led to stockpiling. So that's consumption from the business side, is they're preparing for that. So they're getting their inventory up, and that's a tailwind for the market because spending money translates to revenue, which translates to earnings.
Tailwinds are good.
Yeah.
Okay. Well, give us the TLDR of what you were watching then.
All right. What I'm watching. One, I'm watching for broadening earnings growth. We can look at earnings overall, like I just laid out. As in broadening, I'm saying the other 493 stocks to show growth, not just those Magnificent Seven. You can also look at the S&P 500 equal weight. Again, if you don't know that, bingo square. I am looking at the 10-year. We have a wonderful episode on rates. When that rallies, it causes a sell-off in equities. I'm watching for that to fall. That's very important because it's tied to mortgage rates. It's tied to calculations of price targets for it's very important for earnings growth for that to fall. The 10-year, though, we had some cooling inflation prints this week. I think it's important to talk about that, where the 10-year moved from 4.78 to 4.65. We just need to see that to continue for the market to rally. And the next Fed meeting is Jan 28th through the 29th. I feel like I said a lot there, but I definitely did. It's watching for earnings growth and making sure inflation is still coming down and rates are also coming down. That's it. So yes, in a nutshell, really, it's about knowns and unknowns. And a lot of it is also fiscal uncertainty. So the market hates uncertainty. We know that inflation is coming down because we just had some inflation prints showing us that it's cooler. It's well anchored to 2% in the terms of the Fed. We don't know fiscal policy. That's the unknown. We don't know the impact of tariffs on inflation. We don't know consumer behavior. But the fear of unknown fiscal policy it's the fear that could reignite inflation. So the key theme, I keep saying the word, is inflation and interest rates, how that impacts consumption, how that translates to earnings. The market moves on earnings growth, and that includes the expectations of it, period. Just period.
Okay. Well, we covered a lot today, as usual. Yes. Don't forget to check out the quarterly planning vision board bingo sheet in the show notes, or you could get crafty and make your own. Maybe do it with some friends, make it fun, keep everyone accountable. Ooh, and have like a fun treat planned within your budget, of course, if like everyone gets, or if you get a bingo, maybe you can incentivize yourself. And then tag us if you make any cute posts about it so we can see what you're doing and what your goals are, because that'd be fun.
Oh, I would love to see that, please. Yeah. All right. Well, I had so much fun doing it with my friends. We did it over brunch, so you could do that too, but you don't have to. And you can watch my TikTok before it gets banned if you want. It's also on my Instagram, which is linked, of course. But if you found this episode helpful, please share it with someone who might also find it helpful. Share the wealth, the education, literally.
That's right. We don't gate, we educate. God, when did I become such a cheerleader? Anyway. Follow us on Instagram, YouTube, and we just set up a Blue Sky account at Market MakeHer. If you happen to be over there now, haven't posted there yet, but it will be on my Market Maker bingo card because I need to do that.
We definitely do need to make a bingo card for the podcast. So we'll do that. Maybe we'll post it. And remember, when you build knowledge,
you break barriers.
Remember, investing involves risk. There is always potential to lose money when investing in securities. Market Maker provides educational content and resources for informational purposes only. We are not registered financial advisors and do not provide personalized investment advice. Any information provided by Market Maker on our website or podcast is not intended to be a substitute for professional financial advice. Market Maker is not liable for any investment decisions made based on our content.